Okay, welcome to the Swing Trading with Cycles channel. We're going to do a review of Tesla today. It is November 9th. It does happen to be the night before the CPI release. That happens in November, right? So October data reported in November. So we're going to see some pretty volatile price action over the next couple of days. That said, this video will still be relevant 3 months from now, 4 months from now, maybe even a year from now, I could see, because we're really going to talk about the long-term trend and moves that may play out over the next several years, if not maybe even longer than that. So let's see. Let's start with, so this is the setup here. On the upper left-hand corner here, you have the daily chart. Right here, adjacent, right next to that, you have the weekly. On the bottom left, you have the annual chart. And on the bottom right, you have the monthly chart. So it kind of goes in a sort of clockwise fashion from lower time frame to higher time frame. And that's the key. Looking at things on multiple time frames gives you an advantage, especially when you understand the higher time frame trend. And so speaking of that, that's where we're going to start. And again, that's why this video will really apply regardless of whether you're watching it in November 2022 or let's say March 2023 or even November 2023, right? A year after it's released. Look at this annual. So this is all the data we have on Tesla. It hasn't traded for very long, right? It IPO'd in 2010. Every candle here is an entire year of price action. So this gives you the big picture trend. And you can see this is an important concept. This year, like that 2010 year that we opened, that next year was just an inside year. We did not make a new high. So that first year that it opened, there was a high of $2.43 and a low of $1, right? That next year in 2011, we traded at a high of $2.33 and a low of $1.41, right? So that low was $1. This low was $1.41, right? So 41 cents higher, and the high was 243 in 2010, and in 2011 the high was 233. So you can see it really didn't go anywhere, right? Long-term trend. And then that next year we made a slight higher high in 2012, and then we had a really big move in 2013. And since that big move in 2013, there's been just a lot of consolidation, albeit moving on an upward slope. And then you get the real explosion year, 2020, where you had a low of $23 and you had a high of $239, right? So a 10x in a year. And just so we were not even using, even not even thinking about the low, the open for that year was $28, right? And the close was $235. So not quite a 10x, but just buying the open and selling the close in 2020, you made a lot of money, right? And that's where all the price action happened, right? So again, this 1, 2, 3, 4, 5, maybe you could even argue 6 years of kind of doing nothing, then an explosion. Now, notice what we have here is we've just gone below the low from last year. So we've been making these higher highs, and in 2021, we made an all-time high at $414.50. Since that, we've pulled back, and in 2022, we did not make a new high, right? The high for 2022 was $402.67, right? So, a bit lower than the 414. That sounds familiar, right? It's kind of like this inside year, kind of not doing anything. But then something interesting happened. We didn't make a new high, but we've now made a new low. That's not a good thing, right? The low from last year was $179.83. And we've now made a low. We've now gone to 177.59. So a slight lower low, yet that could be a sign of much worse things to come. And if you really look at the structure of this chart, it should become apparent to you. Once we break this low, there isn't a whole lot holding us up here. And we're going to look at the lower time frames. And that's the important thing about multiple time frame analysis. In this case, there's a lot happening in 2020, right? This is, you could break this down into 12 monthly candles or something like, 50-ish weekly candles. There's a lot happening here that you can kind of dig in. And so we can understand just structurally where there might be potential sort of demand / support, right? But Suffice it to say, going below this low here, because this candle marks the high, right? And you can see it happened one time before here, right? This candle, so this is 2016, went below the low of this candle from 2015. Now we recovered before we closed that year. That's what this wick is. A lower wick is always a rally on a lower time frame, just as an upper wick is always a pullback on a higher time frame, right? So we recovered, and then that next year we made a higher high, and eventually we obviously resolved higher in the years to come. In this case, we've got 2 months left, so we're either going to get a furious rally and they're going to build some wick, and that'll give people a little bit of comfort. Now, what that will mean is next year was going to open as an inside year, and that's what you really want to understand. This thing is dead money probably for a little while. Now, crazy things could happen. We could get some really big green candles. All of a sudden, this thing is kind of moving in the other direction. But think about the probability. Like, what would make that happen? Maybe you say a Fed pivot. We'll have to see, but it's sunk a pretty deep hole. The other thing I will say, for those that are familiar with the work on this channel, and of course, take a look at the links in the description. This move here, breaking below this low, makes this a swing high, and we'll talk about what swing highs look like on lower time frames. But keep in mind, this is the highest time frame that you can have. So a swing high, a bearish swing high on this higher time frame chart is really bad news, right? So let's dig in. Let's look at the monthly chart. What does that tell us? And think about that, right? All of these candles, right? These 12, well, in this case, call it 11 monthly candles, because we have, a candle for each month, including November, which hasn't closed. These all combined make up that red candle that we were just looking at in the annual chart. That's the way to think about it, kind of conceptually. That chart just kind of consolidates everything for you, right? And so one thing you can observe, just to keep the eye, like it's just an easy sort of visual aid. This teal line here is a 50 period moving average. Since this is a monthly chart, that is the 50-month moving average. So basically the average price over the last 5 years. So a very long-term low, long-term average. And you can see we're almost like seeking it out, right? And that's not because it's mystical by any degree. It just means because we're in such a long downtrend, right? Like we've been declining since November 2021, right? So we're now on a full year of declining. It makes sense that price is going to fall below the average price over a long period of time because we've been falling for so long, right? And so that you think you would imagine that we're at least going to close below this moving average before this thing is over, right? You can see in this period of turmoil in 2019, we closed several months below it, right? 1, 2, 3, 4, 5, 6 months below it, right? And here, we just kind of grazed it. Again, nothing mystical or magical about this particular moving average. And you can see we're well below the 10 period moving average, and that makes sense. That's what you would expect. We dropped below that a long time ago because we've been declining for so long. As I said, it's going to take time for us to fall below the 50 period moving average. That's how price action works. That's the way to kind of think about it. You can throw some Bollinger Bands on here. Wow, I mean, a drop to that lower Bollinger Band gets us to like 100. So taking these indicators off, right, these moving averages and whatnot, like just thinking about structurally, you can see it makes sense that we took out these pivots because that is the low from last year, right? That becomes like this whole candle is your 2021 candle, right? Just as this whole candle is your 2022 candle. It makes sense that we took out those lows sort of structurally, right? Now this looks like a cluster that's going to give way next, right? And again, I call this, call it a zone, right? Like in that, wow, that's pretty wide, right? Let's say something like that. And because this candle has a lot of lower wick, which means there was a furious rally on this lower time frame, which eventually actually resolved higher. But you're thinking in like your 120s to 110 area, and we're up here at 177. So that's a good sort of that's a good kind of target to the downside, right? And you can see in terms of just specific structure, this is your major swing high that caused everything in November, but this is another swing high that started another leg down. That's another swing high. That's how you think about these things, right? As we cross below the low from that candle, it creates a lower low. and then it kind of springs back up and generates a higher high. And so you could say, well, this structure looks kind of bullish. It's like a bull flag. Well, maybe it resolves higher, but right now this is a downtrend. It's been a downtrend for a year, and we need signs that it's reversing, which would mean first we need to go green on the monthly chart, right? Well, we need to go green on lower time frames to cascade into a green month. And then we need to start making higher highs and higher lows. That's the recipe. It's very simple. So if we look at if we zoom into the weekly chart now, same kind of idea. We're making new lows. This yellow line here is your 200 week moving average. So a little bit similar. So the 50-month moving average is a little bit longer. It's 5 years. This is about 4 years more or less. But you can see we're kind of seeking this thing out like a magnet. And again, it's the same levels, right? It's this kind of pivot right here that looks like it's going to get tested. This area here, you can see multiple weeks just kind of consolidating in this area. It makes sense that price might find that area. Now, what happens when we get there? Do we bounce? Do we kind of sink through it? That's what really tells you what kind of depths we're going to. Because we'll go back to the annual chart at the end of this to just kind of think about worst case scenario. Not that I say I think it's going to happen, but it's what, you might kind of a doomsday scenario. And again, just not to belabor the point, but you can see the same structure on the weekly chart. Or excuse me, this is your daily chart. And that 200 week moving average in yellow has curled over and is moving lower. Now, I will say you would imagine at some point there's going to be some kind of rally back towards it, right? Because price can't go down in a straight line. Like that's That's what price did, right? So at some point you're going to try to get some kind of rally back before you kind of plunge to lower lows to get to like that 120, 115 kind of area. It's not going to just fall from 177 down there. There will be bounces along the way, as which we would expect. And obviously, like anything else, this is going to react violently. You can see it's been just falling like off a cliff. Tomorrow is CPI. That's going to be a really important kind of catalyst in the near term. But what you're really kind of thinking about, if you go back to this annual chart, I'll close this out. Your doomsday scenario is that we reverse this whole move, right? You get down into your low 20s. Now that would be kind of wild. And if we look at the monthly chart, right, that kind of gets you to, right, like this pivot here, something like that, right? That would be wiping out this whole rally. Like, because this is saying that you're wiping out this rally. This would say that you're wiping out this rally as well. That would be extreme. That's if you really get that capitulation crazy event. And maybe we don't even spend too much time down there, right? It makes a pretty, like, maybe it's like a V bottom, not necessarily back to all-time highs, but at least, you don't get a chance to buy it down at that level for too long. But that's just, a potential scenario. We'll watch the price action in real time and report back on this channel. That's how you think about the stock unemotionally, using levels, understanding price action. Thanks for watching.